The only thing that's 100% certain in my analysis, Leia, is that fiat currencies will continue to debase on an accelerated basis. For that reason, you need to own protection against that. Now, you could argue, is it an inflationary expectation? Well, the truth is, even in a deflationary environment, fiat currencies will continue to debase. So I don't care whether it's inflation or deflation. It's protection against the certainty of fiat debasement. That's a very, very important context because every single fixed income instrument in the world is a fiat contract. So
Hmm.
essentially, you own a contract that is guaranteed to debase in value. Wow. Given that global debt is the largest financial asset out there, it's a certainty that that financial asset will continue to debase over time. It blows my mind that people haven't done the math, but clearly a lot of people have not done the math.
Hello and welcome to Money Talks. In today's video, former hedge fund manager and investor Greg Foss, who is now a big Bitcoin enthusiast, updates about Bitcoin and the problem with fiat ponzi along with debasement of fiat currencies. Greg was one of the 5 people who held multi-signature keys to the Bitcoin raise for the Canadian Freedom Convoy protest. He explains why Bitcoin is going to be used by a lot of people, why the global macro picture shows that fiat is in the end of its cycle, and why all fiat currencies are like ice cubes that are melting. Make sure to stick around till the end of the video, where Greg Foss also shares a price prediction for Bitcoin. So without wasting any more time, let's dive right into the video.
In a nutshell, from my perspective, I believe Bitcoin to be credit insurance. I believe it to be essentially the equivalent of a credit default swap. Now, I don't want to get too granular with your listeners, but it's effectively purchasing insurance on a basket of fiat currencies. And I can value that using credit default swaps on sovereign nations. This is the gist of my thesis that Bitcoin should be thought of as credit insurance. Now, Wall Street has not agreed with that yet. They've decided they're going to trade it like a risk asset, and all the algos in New York are going to trade it in correlation to the S&P and the NASDAQ. But over time, as big money becomes smarter, and it takes time for big money to be smart. Most big money is stupid as a post, okay? Including lots of Canadian pension funds that, for example, just off the, on the topic, one large Canadian pension fund that invested in Celsius Network, seed capital round, or Series B, before coin. This is the mark of a very foolish asset manager. But the reality is they exist all over the world, these types of asset managers who do traditional things and don't study things that hard. And they're staffed by, some old fat white guys like me. And at the end of the day, they are lazy. They're intellectually lazy. So it takes time to teach the world new tricks.
Since Bitcoin came into the picture, people have talked a lot about how it affects inflation. There are many stories about Bitcoin's meteoric rise over the last 13 years, but none are as common as the debasement of fiat currency, which is definitely considered inflationary. Now, the price of Bitcoin is going down, which is confusing to many Bitcoin users because inflation is at its highest level in more than 40 years. The Federal Reserve's job description includes a goal of 2% inflation, but we just got the consumer price inflation number for June 2022, which was 9.4, and that is more than 400 times the goal set by the Fed. In fact, inflation is probably even higher than what the CPI says. Wage inflation isn't keeping up with inflation, and this is starting to hurt households a lot. The mood of consumers is at an all-time low.
The problem with the fiat Ponzi starts with the commercial banking system. And the reason that's a problem is because commercial banks are 25 times levered to their capital base, which is to say that for every $100 of loans a bank makes, only $4 to $6 is equity capital or risk absorbing capital, and the other $94 to $96 is your depositor's money or subordinated debt. So how often do you think a bank makes a loan and the value of that loan declines by more than $6? Well, it happens all the time, okay? If you've ever traded debt, which I've done for 35 years, you know that the prices of bonds fall by far more than $6 over the economic cycle, whether it's because of credit risk, primarily because of credit risk, or it's because of changing interest expectations on behalf of the central banks globally. Bond prices are volatile. Very simply, Leia, commercial banks need inflation in order for their collateral to increase in value to compensate for their undercapitalization. That is the Fiat Ponzi in a nutshell. After 35 years, I finally found Bitcoin. Bitcoin is the only digital asset that solves the Fiat Ponzi. Very simple.
Why isn't Bitcoin going through the roof when inflation is getting out of hand? Even though fiat debasement and inflation are linked, they are really two different things that can happen at the same time for a while. People have talked a lot about how Bitcoin is a hedge against inflation, but Bitcoin has been more of a barometer of monetary policy than of inflation.
And by the way, there was nothing coercive there. It was a bit of a tongue in cheek. Yes, this is the commercial banking system, but the reality is Henry Ford said the same thing about 100 years ago, right? He was quoted as saying, if the average American understood how the commercial banking system works, there'd be a revolution in the morning. So it's a fact of the structure of the fiat system, where you have commercial banks that need to have an incredible amount of leverage to earn proper returns for their equity holders. It basically puts the system at risk of cyclical failure. And notice that the first one, 1988, was followed 10 years later. 1998 was followed 10 years later. 2008 was followed 10 years later. 2020. Okay. The depths of these crises get more severe because the central banks bail out the system and kick the can down the road. And consequently, we are in a spiral, a DEBT spiral that can never be repaid, and thus currency debasing is 100% certain.
Macro analysts and economists are arguing a lot about our current inflationary situation. They are looking for similarities and connections to other inflationary times in history, like the 1940s and the 1970s, to try to predict what will happen next. There's some similarities to times when prices went up in the past, but there's no example of how Bitcoin would act in this situation. Only 13 years ago, Bitcoin grew out of the ashes of the global financial crisis, which caused one of the largest increase in money supply in history up until that point.
Because I believe every single credit manager in the world needs to own Bitcoin as insurance on the credit portfolio, meaning on the Fiat Ponzi. Okay, so I wrote those thoughts in an article. That's one of the reasons I got invited to speak at the first Bitcoin Miami conference, and it was well received. But it was written, and I wrote it on purpose for portfolio managers, credit portfolio managers, who are a weird bunch. Okay, we're a bunch of square pegs in a round hole a lot of times, but at the end of the day, they said, can you write it in layman's language? And I partnered with the group at Looking Glass Education to do that. We did the first article. Again, it was quite well received. And we said, well, why don't we do this on a regular basis?
For the past 13 years, the government has made it easy to get money. The Fed has been dovish, and whenever hawkishness reared its ugly head, the markets crashed, and the Fed quickly changed course to calm the markets back down. During the same time, Bitcoin went from being worth pennies to being worth $69,000, making it one of the best performing assets of all time. The theory has been that Bitcoin is a up and to the right asset, but that theory has never been challenged by a significantly tightening monetary policy environment, which is where we are now.
We'll hit that question first, because if they taught you that the Fiat Ponzi existed, no one would deposit their money in the commercial banks, would they? They'd be like, okay, I'm teaching all these kids through university that they shouldn't trust the financial system. Oh my goodness, that destroys the fiat system itself. So they can't teach you. And the places that we're seeing it catch on right now are parts of the world that are non-G7, right? It's the G7 countries that run the world. They run the education system in the G7 countries, but you're seeing it actually catch on in the less privileged countries of the world, where reality can be taught. But you can't learn this in Britain. All right. As soon as they taught you this in Britain, your your famous bank street would go out of business. Okay. So, make sure that we know what the incentives are to teach the truth. And I believe that Bitcoin should be inversely correlated to risk markets, meaning as equity markets are tanking, Bitcoin should actually have a bigger bid because it's insurance. It's like fire insurance. And right now the fire is on our back porch. And the price of fire insurance has actually gone down. It's a beautiful thing. Doesn't make sense, but not all markets make sense. One of the things about Bitcoin or about trading in financial markets, and we just cut out, hopefully I'm back. One of the things you never make you can make a price prediction, but not a time. Okay. So over time, I know what price I believe Bitcoin goes to, but I can't tell you when, or it would be foolish for me to predict at an exact time. All I do know is these 10-year cycles are getting more severe and they're getting compressed, more compressed. So I would say, knock on wood, I hope I live for the next 20 years. I believe it will be within my lifetime. Thank you for that. I believe it'll be within my lifetime. I have talked about a price target I have, and it's a very rational price target, in my opinion, which is over $2 million US per Bitcoin in today's dollars. Is it 100% certainty? Not in the slightest, but the market is currently pricing it at such a low probability that I have the correct price target that I'm like, hey, ship it in. I think my odds are way better than the odds that the market is giving me for that potential outcome to come true.
Regardless of whether inflation stays high or calms down to more normalized levels, the bottom line is clear. Bitcoin will likely start its next bull market when monetary policy changes, even if ever so slightly or indirectly. So, do you agree with Greg Foss that we're in a debt spiral and Bitcoin is the only solution? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video, and thanks so much for watching.